GM, good morning. Welcome to the Milk Road Show. The daily crypto show we're holding for 3 days now counts as long-term conviction. I'm your host, Jay Hamilton. It's Monday, June 16th. Today's episode was recorded on June 6th. Today, we are joined by friend of the show, legendary crypto investor, founder of Oath Pact Venture, fellow podcaster. He once turned $3,000 into $600,000 over a 6-month period in 2021. Today, we're going to talk about Jesse's predictions that he made on this show 6 months ago, back at the beginning of the year. We're going to review his predictions and see, does he feel the same? Anything he would update, anything he's gotten right or gotten wrong so far. I'm talking about Bitcoin and Ethereum predictions. I'm talking about Altseason predictions and his highest conviction trades for the rest of the cycle. Before we jump in, I hate to ask, but if you guys could do me a favor, wherever you're listening, podcast, YouTube, Twitter, hit us with a like, a subscribe. It really makes a difference for the show and helps us grow and make better content for you to help you as an investor. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. Without further ado, Jesse, welcome back to the Milk Road Show.
Glad to be back.
Pleasure to have you, my man, always. Okay, let's start with your predictions that you've gotten right so far, or that have happened so far this year. So I'll read out. I'm going to read out 4 of your predictions, and then you can talk us through your thoughts on each of them. So you first predicted that there would be a Bitcoin strategic reserve would happen in 2025. Check, nailed it. Major dip early in the year. You predicted that, but actually, I could pause there for a second. Talk to us about that. The way it happened is exactly the.
I predicted a major dip early in the year, but what happened was not what I was talking about. So I was talking about like the typical January dip, there's no way I could have predicted the tariff madness dip. Okay, that's not like, I don't have wizard level foresight here.
I don't think anybody predicted that.
No. So I can't claim that was a win. We might have had I don't even remember if we had a January dip or not, but it definitely didn't play out the way I was thinking.
Okay. You next predicted that Ethereum would kick into high gear starting late December, early January.
Yeah, and that didn't quite happen in the same way either. We have seen Ethereum start to show some outperformance like lately, not in the same way. My whole mental model for like the early start of 2025, I think was like probably most people's in the crypto space mental model, which is it was really based off the like typical 4-year cycle. And everyone was just expecting, okay, it's gonna be like 2021, early start of the year. It's gonna be really bullish. And everyone kind of front ran that after Trump won. We ran up prices, and then the underlying liquidity like fundamentals that were supposed to appear didn't appear because everyone was working off of an outdated mental model. And so that did not come to fruition the same way that I thought it would.
Okay. I want to ask how you've changed your mental model and what you got wrong or what you got right. But before I do, the last prediction that you had early in the year was that there would be full-on alt-season mania would kick off in February.
Yes, correct. And we had a full-on alt-season mania in December after the Trump one. Well, I wouldn't even call it alt-season mania. Actually, I've like kind of separated the definitions. I call that an oat season now. It's like an off-brand alt season. It's like when you go to the grocery store and you get like that off-brand, whatever.
Call it oat season?
Oat season, yeah. It's like it comes from like this guy in like one of the comments trying to type in alt season, but he wrote oat season. I was like, I like that. But yeah, so I would call that an oat season. There wasn't the fundamentals that are required for an alt season during that. It's just more like crypto capital rotating in, pushing prices up, but obviously there's nothing to sustain it, and then it comes back down. So we had that, but that again was also based off that same mental model of like just expecting a 4-year cycle to appear because it's always appeared every time before.
Did what we just have, would that be considered an oat season? These past like 6 weeks when we've basically gotten, I mean, we're not at all-time highs or anything, but alts are back, essentially. Most of them, at least the major alts, are back compared to where they were down pretty bad a few months ago.
I would just call it like a recovery. I think we had the tariff madness, prices like nuked, but they got oversold. There was too much fear. And then I think once the market kind of started pricing in like, okay, the tariff stuff maybe is not going to be as bad as we think. Maybe the entire economy is not going to collapse the way that we think it is. Then things kind of repriced up. So I wouldn't call that an oat season. I would just say, because there was no hype driving it, it was more just a kind of a reversion back to where we were.
Yeah. Good point. Okay. Talk to us about, before we jump into your predictions that haven't had enough time yet, talk to us about the mental model, this shift in what you saw at the beginning of the year versus the way you're looking at the markets and investing now.
Yeah. Okay. So being completely wrong about Altseason. Okay. Maybe to be clear, I don't just like, I'm not just like out here producing content or whatever. Like my entire life savings is in crypto. And if I'm wrong, I pay for it in blood. Like it costs me heavily when I'm wrong. So I don't like to be wrong because my net worth goes down pretty substantially. And so that was like a brutal, like maybe wake up call of like, hey, my simplistic Fourier model framework is outdated, and like what actually causes Fourier cycles in the first place. And so I've since done like a really deep dive into like what causes the Fourier cycle, what causes that thing, and just kind of working my way down to the roots of like where does all this stuff come from anyway? Because it is not the Bitcoin halving. It's not like all these other things that everyone else says it is. It just is. There's just no way. There's no way that that's actually what causes it. And so, yeah, I'm doing a lot more work on that end to try to time things. So I'm not caught off guard again. I think it's okay to make a mistake once, but if I make it twice, then I'm just being like dumb because I should only have to learn that lesson one time.
Yeah, fantastic. Okay. Can you give us I know that this is not a simple short answer, but can you give us the TLDR on what you've learned and how your model has changed and what matters most in markets in your view?
Yeah. Okay. I'll start with like the basics. So like most people were like Fourier cycle, super simplistic. People like underneath that will be like, actually, it's driven by M2 and it's liquidity, which is true. It is driven by liquidity and M2. Like at basically every 4 years since 2008. So you had 2008 financial crisis, right? And then you had the response to that financial crisis, which was a whole lot of money printing and a policy where we brought rates down to zero, fundamentally changed the way that we did things. And then in 2013, we had this huge spike of year-over-year momentum in liquidity. So like liquidity spiked up and then it retracted in 2014. Then in 2017, we had, in 2016 through 2017, this one's a little bit different. It's kind of hard to explain, but there was money printing in 2016 that was pretty heavy that carried over, or liquidity, a burst of liquidity that carried over into 2017 that fed into that cycle. And then obviously in 2021, we know that we had also a huge year-over-year burst of the global M2 supply. So all three of those periods, you can directly trace back to like this. It's not just M2. A lot of people show this chart of like M2 and they're like, look, it's going up. But if you zoom out on the M2 chart, like it's literally always going up. Like they're always printing money. It never stops.
They will
going
never
up.
stop. They will never stop.
Yeah. So that one's not really as useful as people make it out to be. It's like really good content, but it's not really useful because there's not a lot of signal. If it's always going up, then how do you know? But year over year, like growth percentage wise, that's a really great signal because if you actually look at the year over year chart, you can look at it and you can just point out like, 2013, 2017, 2021. You can see all the bull markets and they're just all huge bursts of liquidity. So that's true. Global liquidity is like kind of the next step down, but you got to ask yourself like, where does the global liquidity come from? Like why every 4 years are we getting these huge bursts of liquidity? And then you go under that. And basically when you work your way down to the bottom, it does come down to debt. It comes down to the fact that globally, we run off of debt, not just governments, but like people, like the entire world it operates on debt. And this debt has become so massive and so huge that like everything accelerates. Like think about like back in the 1970s, 80s, like they're really getting into this debt. It's not really bad. It's just like a minor thing. It's a minor thing. So maybe under the weight of it, things break every 10, 15 years. Like it's not very often, right? Every so often you have like a hole in the boat and then you got to patch it up. How do you patch it up? You pump a bunch of liquidity into the system. Well, as you've kept patching this boat, it goes from like this, nice, secure, clean boat to like this thing's just falling apart. There's cracks all over the place. And so now we're springing leaks all the time. And so it's like every 4 years, we're like, oh my gosh, some massive thing breaks. And then how do they patch it up? They pump a bunch of liquidity into the system. It's kind of like that. If you ever go on mountain biking, it's like that green ooze you like pump into your tire. That's basically what liquidity is to the financial system. So they're constantly having to pump this green ooze in there. Basically, at the very foundation is like nobody wants to be responsible for the whole system falling apart. Nobody wants this whole debt bubble to explode on their watch. Anytime something breaks, anytime there's any sort of financial pain, they have to respond or else it falls apart. And the only tool they have to respond is to, in some way, pump liquidity into this, is to put the green ooze into the system. And so at the base core, it comes down to like policy decisions and incentives of like, what are these policymakers going to do? If you were to really zoom out, like I have this whole thing called the 11 rings of power, which are basically just like 11 policy points of like, if they flip on green, think of things like money printing, debt forgiveness, things like that. When they flip on green, the more green you have, the more likely we're to hit Altseason. And sometimes they can go beyond green. They can go to like mythical purple, which in 2021 is like, it was like purple, white, green. It was like this pristine, like so much money printing happening. If you were to say those are the 11 rings of power, what's the one ring? What's the one ring of power? The one ring to rule them all? That would be basically economic pain. So any sort of huge amount of economic pain is what'll push policymakers to say, okay, we got to fix this pain by pumping liquidity into the system. So yeah, that's kind of like the big overview of what causes it is, yes, liquidity, yes, global M2, but what causes global M2 is this huge amount of debt that's got to be constantly maintained. And when a crack in the system happens or the system looks like it's about to break, policymakers rush to fix it with the only tool they know, which is inflate away the value of the dollar, pump a bunch of liquidity in the system, and then
but keep the voters happy in the short term, because it's very. I had a great episode earlier this week with Lawrence Lepard, who wrote a book all about this called The Big Print, and I asked him, I was like, okay, why isn't everybody seeing this though, right? Because like you see this, a lot of economists and guests that I have on the show see this, they all talk about this, right? But it doesn't seem like everyday people know about this other than inflation. Like I think that like everyday people are like, yeah, inflation's real, I get that, but it isn't like this. It isn't a mega scale narrative, pitchforks, riots, or anything like that. But yet when you step back and look at it, you're like, yeah, there's like our current governments are screwing us because they're just deflating our way of dollars endlessly. And he basically was like, it's just too advanced for most people to understand. It's like mega advanced fraud on like the highest level scale. Fraud might be extreme to call it that, but point being, it's very difficult to conceptualize this debt refinancing cycle, all these 11 rings of power that you're talking about. Most people, it's way too much for them.
I think if you've been around a crypto cycle though, one or two times, like a really basic way to think of it would be like, just imagine the U.S. government and every U.S. government or every government in the world they have their own crypto token. It's their own little Ponzi token, like the Ponzi's from 2021. And every time their token starts to collapse in price or their little Ponzi starts to fall apart, what do? They issue a bunch of new tokens and go sell those on the market to kind of push up the price and keep things going. Even though it doesn't work exactly like that, that's like a really basic analogy is like, if you've lived through this, like crypto has done all these experiments, you felt it. And that's what's happening, but on a much bigger scale.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. I like that analogy. Okay, so let's jump into, I guess, your next two predictions here and then I would love to know, where are we at in this 11 rings of power? How many are green right now? I really like this rings of power analogy that you've come up with. So you predicted Bitcoin 170 to 190 and ETH 13,000 to 20,000. Super bullish prediction on ETH.
Yeah.
Thoughts on you sticking with those two predictions? Would you change them at all based on what's happened the past 6 months?
Yeah. So what I said is by the end of the cycle, and I'm not changing that. That's all. And I would say the range really depends on like how much liquidity do we get? Like how fast does liquidity accelerate? Like how big is if you ever go look at a global year over year M2 chart, and you see these blobs I'm talking about. How big is the blob in like aggregate? Like the way I like to think of it is, which seems to work out, is like the total size of the blob equates to like the power of that alt season or whatever. And so if we get a crazy amount of money printing, honestly, like I think most people sit in this camp, like Bitcoin could go to around 170K, or if things get out of control, it could go to around 250K. I think those are the two most reasonable guesses, and I kind of sit in that same one. And I think most people with ETH, I don't think my prediction is that crazy, because I think most people are like, yeah, 10K to 15K. And honestly, I think they're right about that, is that once Bitcoin has gone high enough, people, and you're already seeing it, people view ETH as like a catch-up trade. And so ETH's like, in people's minds, it's like the silver to Bitcoin's gold, in a way, in that, like, you know, you have Michael Saylor out here doing strategy and all that. And then you have all these other companies that are like, okay, we're going to do that, but with ETH. And as the market cycle accelerates, you would just see more and more of that, which would be enough, I think, to push ETH to those levels.
Okay, so let's talk about Altseason. What's your prediction for Altseason, and then maybe you could tie it into this rings of power thesis, and how much liquidity do you think we're going to get? Maybe tie it back to the big beautiful bill. That's obviously going to inject a lot of liquidity if that passes. Who knows? It seems to be endless everyday fighting happening around that right now, but give us your take around it.
So I monitor like a lot of different. I actually have a couple different models where I modeled this out. Ledn rings is just one of them. I have another. I love my names, but another one's called the omnicycle framework, and it basically is like a big view picture of not 11 rings would be where policy starts. The omnicycle would be like the different things like credit and like its conditions that happened after that a little bit later downstream. And so right now, Basically, the way it would view it out would be that we have enough fuel within crypto to like maybe have like an Altseason. So you need fuel plus a catalyst. So there's a lot of good crypto native fuel, and the picture for crypto is really bullish. So we could have that if we had some sort of catalyst. Think like 2024 we had the ETF. Recently we had the Trump election, something like that like sparked maybe like the SEC changing or something to spark all that fuel into like moving crypto prices higher. But we don't have currently conditions for an alt season. It's just not there. We don't have enough global M2 growth in order to like, you need like an abundance. You need like, think of like the .com bubble. There was an abundance there too. Like you need an abundance because when you have a huge amount of liquidity pumped into the global financial markets, it just kind of pushes up asset prices. And as those asset prices go higher, that changes like risk on behavior, because they start to head higher. People start to say, hey, what if they keep going way higher? And it's not just liquidity that matters, but it's like the direction of liquidity. So like, and like some of this kind of feeds on itself, because you can create more liquidity like through a mania, through credit. So like if markets are going crazy and people are taking out a ton of credit, or basically a ton of debt, they're using credit to take out a ton of debt, that's a form of money creation. Like when debt is money creation. And so my point being is we're not close there. We need credit conditions to improve. Currently, credit conditions aren't in a great place. You want them to be abundant and you want them to be widely available. We need more liquidity. We need just kind of more momentum in the economy. So right now, the way that my model, so I have one that tries to kind of predict it, try to guess like, okay, here's where we are. Here's typically how fast these things can move. So what's the probability of like all these things lining up for us to have an alt season? The first one's not surprising. It would say that like by late 2025, those things should be in place enough that we would have the conditions right for an alt season. But if you look at purely just like debt and like how debt cycles play out, you'd be in like what would be considered like the winter period of the debt cycle, kind of coming into spring. And so typically like in 2017, the spring period of the debt cycle was in 2016. In 2013, the spring period of the debt cycle was in 2012. In 2021, the spring period of the debt cycle was in 2020. Right now, the spring period of the debt cycle should happen in September of 2025. So that's the only thing that would give me pause, is like the debt cycle is going a little bit slower than you would expect to see those things. And that's such an integral part of like what would cause an alt season. So I think there are odds that you could basically say that either early 2026 or late 2026, it's definitely possible you could see an alt season. It would just depend on how fast these things accelerate. I know Scott Bessent, part of his like three-legged stool is trade, deregulation, and taxes. And so we know taxes are in the big beautiful bill. That is, tax cuts are a form of liquidity. We know what they're doing with tariffs. And then deregulation is around like the SLR exemption and things like that. Like in the financial markets, loosening things from the 2008 standards so that the banks can buy more bonds and we can kind of create less friction so that these things could go quicker. So if that were to happen quick enough, maybe that pushes things quicker. I don't know, but the earliest we could see it would be late 2025. So we're not going to see it anytime soon until then. And then as we get closer, those things will either start to come into picture and flip green, or they won't flip green and you keep pushing it out. But when they're flipping green, we're close and we have the conditions present. We just need a spark.
Mm-hmm, mm-hmm. I should have mentioned your prediction here back at the beginning of the year was that we would have full-on mania mode in 2025. Crypto would be insanely bullish. Retail would be back. Prices would skyrocket to higher levels than most anticipate. Basically, classic euphoria mania mode alt season. One thing that we've been talking a lot about is if we get an alt season, which I think you and I would agree that we will. Will it be like the past, though? That's a conversation that keeps coming up. And lots of people saying it won't be like the past. It won't be, hey, everything goes up. It's going to be certain sectors within crypto or only certain narratives. It won't be every token. What's your take on that?
My take is that, okay, so when people talk about the insane amount of tokens in crypto, they're primarily, or they either don't know what they're talking about or they're primarily talking about meme coins. 99.9999999% of tokens in crypto are meme coins. And that has to do with the fact that Pump.Fun it's to launch a token takes like 15 seconds and literally anyone could do it. And so because of that, if you make it that easy to launch a token, everyone's going to launch tokens. And then even outside of that, like a lot of the tokens are inherently going to be scams because it really is easy to launch a token. And so if you're talking about those,
what do you think the number is? Just out of curiosity, I think it's about we're talking about like 40 million probably meme coins, and then probably like 10 to 20,000 actual tokens. I don't know if that's.
I would think it was I think it's around 1,000, 2,000.
Okay.
And that's not just a guess. Like I have sat down with like O3 and like and Grok and all those things and done like deep research and like, hey, like, and this is better than I could do. Those deep research tools are insane. And so I've been like, try to guess how many tokens are like real. Think of like their team's got to have innovation, like they're just doing something innovative. They have some sort of revenue. Like it's a real project. That's just not business. A scam, not a Ponzi. Yeah. And it's like somewhere between 1,000 and 2,000. And that sounds about right to me. It's like, people are scared to build in the crypto space. They're scared of the SEC. It's been horrible. Most people that we're building left. So yeah, 1,000 to 2,000 sounds about right. All the other ones would be like just nonsense, right? And so when I talk about alt season and alts doing good in general, talking about those 1,000 to 2,000, I don't think all the meme coins like that'd be crazy. There's too much dispersion among that. But I think when most people think of meme coins, they think of meme coins as like a thing. I don't like nobody's diversifying across the 99% of meme coins, right? If they're doing meme coins, maybe they're like, okay, I'm doing Bonk and Whiff and whatever,
and Pepe and Doge, and a few blue chips, and
yeah, but that's like their meme coin bucket. So I'm talking about like utility tokens, like real projects, that kind of stuff. People have discounted it. A lot of people are saying like crypto is just a scam, it's just a grift. But you're starting to see that change. We had the IPO for Circle just happened, 22 times oversubscribed. That thing it skyrocketed as soon as it went. Man, what think of incentives.
Did you buy
like
it?
what? No,
did you buy it?
I wish.
It doesn't make any sense to me. I just got to say it quickly. Like, I like Circle a lot. I think it's a great business, but it's currently valued similar to Coinbase, and that's not accurate. There's just no way. Like, I would not be buying it right now. I like Coin as an investment. Circle, I don't think so.
But what does that tell you about like how many other, for one, any company crypto company that can IPO is now going to IPO? And then how much investment dollars is about to flow into crypto companies? And how many people are going to start building crypto companies? And again, people are underestimating the value in crypto. They see the scams and the grifts and they say, this is just nonsense. But now people are trying to say, okay, but wait a minute, this stablecoin thing, that seems to be working. Why is this Tether company like the most profitable company on the planet per employee? Yeah, what's actually going on here? And so I think people are starting to see like, okay, wait, there is a lot of grift, just like the early internet was a lot of grift, but there's also a lot of value. Like digital assets is actually like really useful. It's cool. We went from metal money to paper money to digital money. That actually maybe makes a little bit of sense. And crypto is like a fundraising mechanism, seems to kind of make a little bit of sense. And so in tokenization, an ETF is basically kind of like a primitive tokenization, and it's basically taking things that are illiquid and making them really liquid and easy to move around, right? And so I think you're going to see a rotation, where, especially as the SEC loosens guidelines. We have Paul Atkins, Hester Pierce is leading it up. And they're like, Paul Atkins is like a full-on libertarian. He's like, freedom to the people. Like, it's your money, do whatever you want. Like, just don't come crying to us. And Hester Pierce is kind of like that too. And I love that. And so imagine where we have clear regulations and you're like, hey, you want to do a tokenized security? Cool. Don't scam people. Abide by these really simple rules. Do it. Experiment. Have fun. Go crazy. What do you think is going to happen when that happens? I think you're going to see a lot more experimentation. And I think you're going to see a renewed like focus on like, oh, actual companies building in this space, actual utility in the space. And you're going to see a lot of these tokens turn into basically stocks where there's like, you have now ownership in this protocol. You now get dividends and revenue. Floodgates open. Like, you want to launch a startup? Hey, you launch a startup on chain, because you could go through this crazy VC process and you got to know the right people, rub the right elbows or whatever. Or you could launch on chain and launch to a global marketplace and raise a crazy amount of capital. And I think a lot of people are going to choose to do that. And I think it's going to open up the floodgates for what crypto could become. And that's where we're headed.
So coming back to my question, Altseason, same as in the past for those 1,000 to 2,000 tokens, you think?
Yes, same as in the past for those 1,000, 2,000 tokens. Maybe it'll be, it depends on how much liquidity is. I don't know if it'll be bigger or smaller than in 2021. That was a crazy amount of money printing. But like the same kind of mania, the retail audience, they crave the casino. They crave the trenches, okay? No matter how much they say it's a scam, no matter how much they say they're never coming back, as soon as it gets even slightly bullish, they're like, let's go, life savings. And they're right in. They're ready to buy the top every single time. And the reason is because fundamentally in the US, because we are a debt-based society, there isn't like the same path there always has been to like live this awesome life. And so a lot of people do feel very motivated, like, okay, the only way I'm going to get here is through something like this. I got to hit the casino. When I say casino, I mean, I got to take some risk. I cannot play it safe and get to my goals. I have to take some risk. And fundamentally, once crypto's, when it offers that opportunity and you see everyone start to making money, you're going to say, hey, this happened in 2021. This happened in 2017. I've seen this show. I'm getting in early this time. And self-fulfilling prophecy pumps everything up. And, they're not going to, yes, they'll do some meme coins, but like when you have like millions of meme coins, like how do you differentiate? Like how are you like, which meme coin do I pick? Utility, revenue, those things are like, they separate the wheat from the chaff, right? And so I think for a lot of people, they're not going to want to touch memes. Some people will. Some people won't. They're going to want to say, I've done the scam thing in crypto. I want to stay with this safe stuff. And that's where you're going to see those things really pump. So
it certainly feels like it's a great take. It feels like there's a real movement from pumpamentals to fundamentals, and I think you nailed it though when you said like it's so our memory is so short term, and one thing that you're so good at is looking back at history and like zooming out and seeing the bigger picture. And it's so easy in moments like this the sentiment is not the same as it was. I mean, just 6 months ago. Look at December, November, sentiment was so high. We were all like, here we go to the moon. And then we had this pullback, right? 30%. It lasted a long time because of tariffs and macro. But the sentiment's not the same right now. But we're basically at the exact same place that we were at 6 months ago, except we actually have a better setup because we have a pro-crypto administration, we have the SEC, like all these things. And so I think, really, not to mention the liquidity that is definitely going to come. I mean, it's already coming in China and Japan and in Europe. There's already printing happening, not on a massive scale.
And they're waiting. So China and these other countries, they have to wait for the dollar to weaken too. And that's like one of their big things is like, it's something like 40% of all debt in the world is based in US dollars. And so we need that dollar to weaken, and so that they can basically, like, we're kind of Bitcoin in the fiat world. We're the Bitcoin of them, and because we're this. I mean, we're not great, but because compared to everything else, we're like this pristine capital. You know, when other people devalue, like if they flow out, they're printing new tokens, the money flows out of there and into the dollar. But when the dollar is going down, it's not as much of a escape hatch. And so they can devalue more without worrying about, hey, all of our capital is going to come out. Plus, you know, when you owe a bunch of debt in US dollars and the US dollar is going down, the numbers in your bank account like just systematically go up in comparison as far as like your head, like, oh, my money was worth 1 billion because US dollar is going down. It's worth, you know, 1 billion, whatever. And so, and the US dollar has been weakening. Like we've been seeing that play out. And that thing seems like if that was a chart, it's like the Bitcoin chart 2021 where it's just collapsing. Boom, boom, boom.
Yeah. So. But that's good. That's what it seems like everybody's on board for that. Everybody wants that right now.
Yeah, Trump wants it. Like. Trump the rest of the world wants it. Yeah.
Investor wants it. The rest of the world wants it. Like everybody wants it. So, okay. I want to shift to some new predictions that you have for the rest of this year, the rest of this cycle. Let's start with high conviction trades. What are your high conviction trades right now?
High conviction trades right now. I think I mentioned it last time, but I really think DeSci is one of those sectors where I think a lot of people can see, well, okay, AI obviously is like one of those sectors where everyone knows, hey, when retail shows up, if we have an alt season, maybe you don't believe in alt season, maybe you do, but I bet if you believe that if an alt season happened, AI tokens would skyrocket. Retail is going to get in here and be like, I couldn't buy NVIDIA. I couldn't buy all this other stuff. It's too high. I'm not going to make life-changing money. But this AI crypto token, you know, that sounds interesting. And so AI is going to skyrocket. But I think kind of adjacent to AI.
Do you have an AI token that you like though? Because that's the thing I can't figure out. What's the AI token to pick?
Oh, there's a lot of AI tokens that. So okay, for one, my tokens are always like I'm trying to maximize like a 100x play. Okay, so this is like max degenerate, like
you're not buying BitTensor, like you're not going after that type of token.
No, I'm not looking for a 5x. I'm looking for 100x. And so think of it like seed investing. Like I invest in really early tokens, and I'm like, if we see an alt season, this token could do 100x. If we had a 2021 like conditions or 2017 like conditions, this token would do really well. And so as far as an AI token, right now one of the tokens I'm watching is called Una. And the reason I like it is, okay, so Virtuals was originally a gaming project. They were like trying to build crypto games, and they pivoted to AI. Una is also a crypto gaming project, but they've been leaning hard into AI. So they have some AI games coming out. They just released this AI studio that you can like generate a bunch of videos and images. It's pretty cool. It's called Hannah Studios. They have their own AI agent called Hannah that has its own token. What I'm really bullish on is the token's like 6 million in market cap. It's like stupid small. So you know,
is this right now? Let me pull it up on screen right here to make sure I got the right one and everybody can see what you're talking about. Is it this one, Unagi token?
Unagi, yeah. So what's the market cap? 9 million. Okay, is this CoinGecko?
10 million.
Go to CoinMarketCap. CoinMarketCap's got like CoinGecko and CoinMarketCap have different market caps, but but the correct one's on the CoinMarketCap. But I don't know what it's at right now. Let's see. 9 million.
No, it's 9 million. Yeah.
Okay, cool. Okay, so 9 million in market cap, super small. Okay, as far as a token goes, they're leaning into AI. Even like I think the narrative of AI, given an alt season, will do good. So like I don't even think a project has to be like doing anything useful in AI. If they're good at branding, they're good at marketing, and the token is like, hey, we're doing AI stuff. Go to their website. Click on their website. I don't know if you can click on their website.
Yeah,
it's on the bottom there somewhere. Yeah. Okay, so look at this. Their website. So I love a good website. And so if you kind of scroll down, you can see like how good their website is, like their branding and the way they like do things. Yeah, it's really good. And so they have this AI agent stuff that they're building. They're building some AI games that are kind of like Tamagotchi-esque. Around AI, they got so many things. So they're good at execution, and they're tapping into AI like Virtuals. They're sitting at 9 million in market cap. So for me, I'm like, dang, I don't think they're going to do good now. It's not like I think they're going to skyrocket in the next 5 months. I think if we have alt season like conditions, that's when they could do good. That's when they could really start to skyrocket. And so, yeah, that's one of them. That's Unagi. And then the DeSci, I think, is kind of adjacent, right? Like it's like science, decentralized science. I think it's got the same kind of sci-fi level vibes. We've already seen it gained every time crypto gets any sort of action. DeSci starts to take off. And so Research Coin, I mentioned last time, I'm really bullish on RSC, Research Coin. That one's at like 50 million in market cap. It's gone up a little bit. I think it was 20 million last time, but it's or 30, what is it, 36 million?
36.
Okay, 36 million. Yeah, so it's gone up a little bit. Research Coin is actually co-founded by Brian Armstrong. And so Brian Armstrong is one of the co-founders. Some other guy is the other co-founder. And they founded it to help as like an open science movement. They want to accelerate scientific research. They do, it's like a publishing journal. So the publishing industry is like 10 billion a year. So they do publishing, they do peer review. They have like an AI peer review process. And then they do funding for scientific projects. And scientific funding is like $1 trillion a year industry. And so they're trying to tap into that. Every time a project is funded through Research Coin, and they have pretty low liquidity. So like you could do like a couple, like $20,000 buy will kind of pump up the price. Every time somebody does funding through Research Coin, they have to buy RSC to fund. And so, and they've had like 600,000 worth of funding. They have more coming. I talked to the president of their foundation recently, and he's talking about like somebody's donated $1 million to like fund scientific research. A lot of this is donations and grants, kind of things. Every time they do that, they have to buy Research Coin in order to fund it, and that's what's given to the people. So that's like an automatic kind of action to push up the token. But 9% of that goes to the foundation. So they buy. So say they spend $1 million, they'd have to spend $1 million plus 9%. The 9% goes to the foundation, and they just hold that Research Coin. And so co-founded by Brian Armstrong, I think is the most important point. It's DeSci, so kind of that sci-fi vibe. Co-founded by Brian Armstrong. So all the degens, retail, they're gonna be like, this project's sitting small and it's co-founded by Brian Armstrong. That's kind of my bull case summed up.
I mean, look at this token in the Altseason of at the end of 2024. Like it was sitting at early November, it was at 20 mil market cap, and it exploded to 140 mil market cap during that, just very quickly. It's always a reminder of how fast all seasons happen when they happen. So it's proven that it has caught the bid previously.
Yes, and so I like to look at projects not as like when the market's dead, I don't care. But when alts start to gain some action, what do they do? Are they a front runner? Do they gain traction, or are they kind of lagging behind? And this is one, every time you see the market, like alts gain any sort of bid, this thing starts heading higher. And so I like that. Obviously though, I do really, really high risky stuff. So it's like, I'm positioned for Altseason. Like I said, this is more like seed investing. You mentioned at the start, like I've done like small amounts of money and turned it into large amounts. And it's because I do stuff like this. And basically I'll do 10 plays. Maybe 8 of them will like either go down, do nothing, or, not do well. Maybe one of them does good. And then maybe one of them is like exceptional and makes up for any losses and then makes a fortune on top of that. That's kind of how I invest. And it's not for everyone because it's like super adrenaline filled edge of your seat. But yeah, I'm heavily betting on Altseason. And if that Altseason doesn't hit, I'm screwed. I'm going to lose a ton of money. So yeah, that's how I'm positioning.
Well, I appreciate you're, as you said, you're not just a creator that's pumping out content for the sake of the creator business. You're doing this because you're all in. You got all the skin in the game, and you are here and you're showing up every day.
Yeah.
For our audience who wants to get some more of your tokens and likes your style of investing, where can they get more access to Jesse's portfolio?
Access to my portfolio. Well, I talk about it on my channel. So if you go to my channel, Jesse Eckel, I talk about what I'm buying. I talk about macro. I talk about where we are in the cycle and all that kind of stuff on my channel. But yeah, that'd be the main place to go. My YouTube channel, Jesse Eckel, and I dive a lot more into all this stuff.
Great. We'll link to that in the show notes because I know some of the guys listening are going to be hyped up on Jesse today. Jesse, thank you so much for joining us. Really appreciate the chat as always.
Thank you. I love being on here.
Yeah, that's great. I love to hear it. I got to remind y'all, none of today's episode was financial advice. I am not your financial advisor. Jesse is not your financial advisor. Investing is risky, and you should always do your own research and take some time to think. If you need help with your own research, you can check out Jesse's YouTube channel, as you mentioned. You should also subscribe to the Milk Road newsletter. As always, thanks for listening in, folks. Have yourselves a wicked awesome day. We'll see you back again soon. Hey all, the Milk Road team is going to be at Permissionless in New York at the end of the month, and we would love to meet you there. We've got a meetup happening on June 23rd. Hit the link in the show notes to register. It's free, plus free drinks. Woohoo! Would love to hang with you and get a chance to meet others in the community as well. If you still need a ticket to Permissionless, you can get $100 off your ticket if you hit the link in the show notes. Hope to see you there. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.